So there was a couple of tweets that happened over the last little while that people were saying they were seeing an 800% increase in inbound leads through AI searches. Yeah, you heard me right.
Yeah, I'm going to reiterate my poop emoji rating on this potential IPO. Kudos to the individuals that founded this and exited, already $500 million in their jeans.
As we head into an election, John, and maybe some changes hopefully coming to open banking in a highly competitive banking environment, what do you think these leadership shifts say about the future of traditional banks and their ability to adapt?
Oh, shit. Here we go again, right?
Welcome back to the tank, John. I hope you got all of your Canadian whiskey and European wine stocked up because Donald Trump has vowed a 200% tariff. I said 200% on all EU products and 50% of other tariffs coming down the pipe here. Are you making sure you're stocked up on your Bordeaux?
I got my bourbon all here, but I'm gonna have to start drinking that Canadian Club whiskey. But the wine is a tough one. I am very much a French and Italian wine drinker, so I'm gonna have to just stock up more on those.
Now, this is obviously in the U.S., so not affecting Canada right now, but this is all around the trade war that's going crazy. EU plan to levy about $28 billion worth of U.S. goods starting next month is what started this. But as they say, talks remain open. Very hard to understand what's going on. But in terms of what's happening north of the wall here in Canada, we have another rate cut, 25 basis points down to 2.75. Obviously, in response to everything that's going on with the tensions in the U.S., I mean, what do you think, John, this is going to do? Is this going to bring people back to the housing economy, put money back into investments? I don't really think so right now because there's too many bigger things happening. But I assume you don't think anything will happen of this rate cut at all, right?
I welcome the rate cut. I think the Bank of Canada doesn't have a choice. They're trying to stave off a recession that, we're on the brink of it, depending on what happens on the tariffs. But it's really about confidence at this point. But I'll tell you what that impact will likely do, and I haven't seen it right now, is the impact on the Canadian dollar. So it's going to, if the Canadian dollar continues its swoon downwards, then of course it will naturally impact the imports coming in from the United States because they're going to just be extremely expensive. But the real problem that we have in Canada is the substitution effect. We got to start looking at the substitution, whether it's food products or et cetera, and start to really determine, just like what we just said right now, do you really need the Kentucky bourbon, or will the Alberta or whomever whiskey, be fine and doesn't sound like a bad trade-off.
No, I mean, the dollar's not moving. It's still sitting around 69.5 per US dollar. And I think you're right. This is a trade-off war between inflation or recession risk. And it feels like, the governor is really focusing on preventing economic downturns rather than taming short-term inflation spikes. That's what it feels like. And more Canadians are still concerned about this slowdown, whether it's, cutting off production, holding off on expansion opportunities. Things like that are really what's on top of people's minds, not these small 25 basis point cuts.
No.
Yeah.
And I've been talking to folks. People are holding back, housing decisions, investment decisions, et cetera. They're not even looking at what the interest rate impact is going to be because it's all about confidence.
Sticking with the banking thing here, a big update on the Canadian banking front. Victor Dodig is retiring as CEO of CIBC on October 31st. After 11 years at the helm. I believe you know Victor quite well. And Harry Cullum is going to be taking over. He is the head of CIBC's Capital Markets Division, will be COO on April 1st, and then take over as CEO in October. Dodig is very well known for expanding CIBC's footprint, including a $4.9 billion acquisition of Chicago-based lender. He led CIBC to the strongest stock performance among Canada's big six banks in the past year. And he oversaw some key moves like acquiring Costco's Canadian credit card business and launching Simply Financial. So what are your thoughts on this? I know you know Victor and maybe even...
And I know Harry extremely well as well. I can't be more thrilled than both of them. And it's interesting. When Victor started his run, it was a really rough beginning because CIBC has had this long history over 20 years. About every 3 years, some move would tank the stock, and they were always penalized from a discount perspective. It really took Victor longer than he expected, I expected, to turn the ship around. And and he did some incredible changes, starting with culture. And I would say about 3 years ago, you could just see the Titanic had turned around. And in the last 3 years, Victor has done a spectacular job of getting the market's confidence in CIBC. And there's no better person than this handoff to Harry, who's been really the number 2 person at CIBC. He's got a very long history, extremely sharp individual. And at least now Harry can take it from Victor and build from all of the great turnaround stuff that Victor has done. So, kudos to both. And I think it bodes well for the future of CIBC.
Yeah, absolutely. A great turnaround story. I mean, it's in line with some of the succession planning we've seen with the wave of CEO transitions at Canadian banks in the last little while, with Scotiabank and TD also seeing ups and changes. But, when you have someone coming from capital markets, moving into the global, role of managing, obviously, retail and commercial, how do you think Harry might be able to influence the strategic direction of CIBC's retail and maybe digital banking products and operations?
I've spent quite a bit of time with Harry he really understands the digital side, and particularly on the Simply banking. The Simply is really a strategic asset of CIBC. There's a gentleman, Jimmy Din, in there who is spectacular. And they experiment on a lot of the things in there in a protected way, so that ultimately, if it works in Simply, they can actually distribute it through the rest of the bank. Harry understands this. He's moved to a variety of positions in the bank that he really has a great handle on all areas of the bank. So I think what it positions, remember, CIBC is the 5th largest bank, but it doesn't need to be the biggest bank. I think it needs to be the one that is best positioned for the digital economy. And that Simply is a bit of a secret weapon in my view.
Yeah, absolutely. I mean, as we head into an election, John, and maybe some changes hopefully coming to open banking in a highly competitive banking environment, what do you think these leadership shifts say about the future of traditional banks and their ability to adapt?
Yeah, so, it's first of all, when I've spoken to the bank CEOs, almost universally, they are now embracing open banking. And for 2 reasons. Number one, the 2 biggest value drivers of a bank is access to cheap capital. And number 2 is trust. And that's not going to change on the big banks anytime soon. So that's their massive advantage. But this is a competitive global world. You're hearing, as part of the trade discussions, Trump's frustrations with the Canadian regulatory environment as it relates to banking. So with open banking in Canada, if this means that the banks could get stronger from a technology and digital perspective, they will be able to withstand even more the global competition. So this is one of the downsides of the oligopolistic behavior in Canada is, when you don't have the competition, you get a little bit fat and lazy. With the open banking, this will actually start the competitive nature, at least certainly in Canada. And you're starting to build resilience when maybe this banking is going to be far more competitive across borders.
Yeah, absolutely, John. I mean, you and I both know the CIBC Innovation Banking Group quite well. They are a fantastic team. They are always on the ball. They are so fast and in the weeds on a lot of things that we are doing at the very early stages. And I know what you're doing at the growth stages. And so I think with a team like that, that's on the innovation and on the front lines of seeing what's happening, maybe on the open banking or fintech side, I think they're going to be very well positioned to take advantage of this next wave that's probably happening with AI and everything. Speaking of AI, I don't know if you caught some of these things that were happening online, but it came out of a conversation we had at our dinner with Omer's Ventures, your old firm, about how SEO is changing in the way of AI and how people are finding companies through LLM searches. So there was a company, Mercury, one of the fintech providers in the US, and then also Vercel, a developer tool company, who is saying that almost 4 or 5% of their leads now are coming from LLMs. It's almost like they call it like LLM optimization. So, if you search who is the best MarTech agency, let's say on ChatGPT as a search, you will get a list of a bunch of results. But how does your results get in there if there really isn't a double click for LLMs? What's happening is some of these startups are starting to feed more content data into these LLMs so that their names come up first. Yes.
Oh, shit. Here we go. Here we go again, right?
So there was a couple of tweets that happened over the last little while that people were saying they were seeing an 800% increase in inbound leads through AI searches. Yeah, you heard me right. It's unbelievable how fast people are adapting to this new world of SEO within the LLM universe.
Well, if you remember back in 2016, I led an investment in DuckDuckGo, and that was really predicated on privacy for sure, but also about what happened to the SEO search and how it was completely gamed, and how DuckDuckGo wanted to remain, the purity. Well, I wonder, is there going to be LLMs that are going to say, you know what, we're going to be the pure LLM and we're not going to be beholden to people that are trying to game the system? But wow, that's a interesting development. It's actually almost shooting down what we were hopeful from LLMs if you can feed that training data in a way where it now just becomes a marketing lead generator.
Right. So the trick is, though, for people to understand, this is not traditional SEO. You have to actually figure out a way to suggest your content to the LLM training data for them to be able to start producing visibility on the outputs, the inference coming out of those models. And so people are seeing some pretty big results. I mean, it is quite amazing. So
sounds like a great investable opportunity here, right?
I don't know how long it's going to last. There's definitely exactly. First mover advantage here. Either.
And all you got to do is start changing the algorithms on how the training data is fed. But that's an interesting development.
Well, it's kind of in line with like the data labeling conversations, right? Everyone saw Cursor's valuation and the revenues that they've got, and the business that they really have, for people who don't know, is it's a data labeling company, right? They basically have people running through, kind of like the gig economy, doing data labeling and helping it feed back into these model providers. And so that is obviously something that needs to have scale to it, but who knows if that's going to be defensible for the long run. Speaking of it,
go ahead. You know what it reminds me of?
What's that?
Remember the proliferation after Google about 2008 really started taking off, all of the retargeting companies that came in, and then we're taking off the pennies on every time ads were retargeting in. But then Google started catching on to that, and customers, of course, were complaining.
Yeah.
And then they started changing the algorithms. I wonder if this is going to follow a similar path. So just interesting, something that you and I should be watching over the course of the next year.
Absolutely. I misspoke. It's not Cursor. I meant to say Mercor. Cursor is the developer tool that's tripling revenue and high rapid growth. Last thing I want to get your thoughts on, John, is this CoreWeave situation. So there are more news come out from the information, just a few weeks ahead of the IPO for CoreWeave. And it broke down sort of the very close relationship that NVIDIA has had with CoreWeave, which everyone knows. They obviously got a massive 230,000 cluster of GPUs from NVIDIA. But there's also some back and forth sort of connections that information was able to uncover. And I want to get your thoughts on this because you were around during the Nortel days.
Yes.
And I want to get your thoughts on how this it rhymes, maybe not exactly the same, but it's rhyming. So just for the audience, CoreWeave, again, is a company that had an incredible run in the last 2 years in revenue, 16 million up to 1.9 billion in revenue. And basically they are outsourcing the hardware part of large language model training because they have the infrastructure support. Now, they've done some really smart things on the back end, though, to allow them to use less energy, more effective, things like that. But NVIDIA is their basically sole provider of these GPUs. So NVIDIA invested 100 million into CoreWeave in the early days. They nicknamed the project Project Osprey to help CoreWeave gain momentum as AI demand was soaring. CoreWeave is obviously a challenger to some of the larger cloud providers like AWS, Azure, Google Cloud, and so on. And obviously, most of their early revenue was coming from the crypto side, crypto mining specifically, before switching to the AI workloads right before ChatGPT blew up in 2021. So there are some big contracts that they were signing, especially a 5-year contract they recently signed with OpenAI for $11.9 billion. They're still expecting to go public at a 30 plus valuation. And NVIDIA's stake of 100 million is currently worth over $1 billion. They've also locked in some pretty massive loans. And between Microsoft and NVIDIA, the two main customers, there's over 75% of their revenue. So there's a lot of news happening that's coming out in real time on this story. But in your opinion, John, what are your thoughts around this? I know you still think it's going to trade pretty aggressively down, potentially off the IPO. But again, maybe this is a long-term play and they can build some defensibility about this. But what do you think about sort of the entanglement between Microsoft and OpenAI and NVIDIA into this, this new company for retail investors to look at?
Yeah, I'm going to reiterate my poop emoji rating on this potential IPO. Kudos to the individuals that founded this and exited, already $500 million in their jeans. But the moment I read this story, the haunting revenue round tripping that Nortel was involved with, and is ringing again. So for those of you who don't recall, what was happening was Nortel in the late 1990s, when its revenues were increasing dramatically up to 20 or 30 billion dollars or so, a huge chunk of the revenues were to very small telecom developers. They were called CLECs at the time. So it's basically boutique telecom networks. But these were venture backed and they couldn't afford the big purchase prices of the Nortel gear. So what would happen is Nortel would make a sale to them, and in exchange, instead of getting equity, Nortel would lend them the money. So no actual cash ever exchanged hands. And the idea would be that eventually these telecom providers or CLECs would then either go public, they would monetize, and they would repay the indebtedness as well. But Nortel booked all of the revenues, and what you started to see is the receivable or the loan receivable go up into the billions of dollars. And when the .com crash had occurred, these loans became unrealizable. And then what happened is Nortel had to do these massive accounting restatements because the revenues were really not revenues, because they still carried the economic risk of the receivable. So it just felt the same thing here. Instead of debt, they're using equity. Microsoft doing this to OpenAI, Amazon doing this, Google doing this, and they call it the compute credits. Well, what happens is the industry is talking about, look at these revenues go right through the roof. Were they really revenues? And I don't know enough of the details, but my back is starting to get up and starting to go, wow, if this musical chairs stop, are these revenues then evaporating? Yes or no? But and I don't have a conclusion yet, but it's just making me wonder at this point.
Yeah, absolutely. And you also have to remember with the hyperscalers, the amount of money that they're investing, AWS, Microsoft, Google, and others, have said they're going to invest almost up to $200 billion in 2025, right? And so they've got their own plans on investing in these data centers. CoreWeave's got its own growth, right, from 14 to 32 data centers between 23 and 24. So they're still, building ahead of, these mega scalers. But with increased competition, AWS, Azure, Google, they can expand and also offer, as you said, cheaper options that could be faster, right? They could offer discounts because they have the capital to do that. Where CoreWeave is, they've got $7.5 billion in debt. They've got a $650 million credit facility. They're in debt with Blackstone. And they've obviously got to hit this, diversification of customers. But it feels like they are being kind of propped up by NVIDIA and Microsoft right now. But who knows how quickly that can change when they have to build their own businesses as well and their own facilities.
Correct. And Matt, you and I had discussed this, it was a week ago. So what is their actual moat? And if all it is addressing excess capacity, this is the same thing that happened again in the late 1990s. The exact same thing. There was about 2 to 3 years of massive building of fiber optic networks everywhere. And then all of a sudden, the market went, we're in an excess capacity. It literally took another decade before so much of the fiber had to be lit up. So we ended up in an excess capacity situation. I don't know where we're in, but there's I could just feel that we keep on building this capacity. And then all of a sudden we get to a point of, holy crap, we're in excess capacity. Now tell me what your mode is. That's when the musical chairs stop. Not saying it's going to happen, but watch it very carefully.
Yeah, absolutely. We'll be watching this very closely. It's a fascinating story, one that we're obviously not very close to, and just reading the headlines and trying to do as much information as we can. But I still think it's something that people should be paying attention to if they have not yet. Thanks for joining us in the tank today, John, as always.
All right. Thanks, Matt.